Well, hello, and thank you for joining me from the Alex on Tech and iTWireTV interview. I'm joined today by Uppili Srinivasan, the COO of Global Transaction Banking at Intellect Design Arena. Welcome to the program.
Thank you for having me, Alex.
Thank you for taking the time, and thanks for telling me that I can call you Oops. So,
Yes.
Oops, before we go any further, can you please tell us about Intellect Design, as most people would know the company with that name instead of Intellect Design Arena, and also tell us about the products and services that you offer to financial institutions in Australia and across the globe.
So, Intellect Design is a fintech provider of composable and contextual technology platforms for banks, financial service providers, and insurance companies. For the banking world, we offer solutions for consumer banking, corporate banking, risk and treasury management. I'm part of the corporate banking division called IGTB.
And just for those who are wondering, what is composable and contextual banking in a nutshell?
So composable banking helps our customers, the banks, be able to compose solutions that make them very unique in their space of operations. Contextual banking means arming the bank with the ability to first understand and then anticipate what their user is trying to achieve. And towards that, be able to offer the best next action or the best next offer.
Now, you're currently in Australia visiting, so you've already explained sort of the main area of banking that you're in, but what have you been doing in Australia? What have you been talking about?
I'm in Australia primarily to promote a product called Corporate Treasury Exchange, or CTX. It's a product aimed at transaction bankers in banks whose primary clients are the corporate treasury division of companies. If you take a step back, what do companies want and what do they operate with? They're dealing with high interest rates. Most of them are international, which means they're dealing with structures that involve subsidiaries, maybe multiple currencies, different treasury centers. In this backdrop, the corporate treasury function is looking for solutions from banks to first get hold of their global balances, then be able to forecast their cash flows, be able to manage cash, and then be able to deploy cash. That's what they need on the one side. Now, what are the transaction bankers that are serving these corporates dealing with? They are looking to drive deposit growth. They're trying to leverage balance sheets. They are trying to provide solutions to these corporates for this access of information for managing cash and deploying cash, while simultaneously protecting the bank in a real-time risk management paradigm. That's what they're dealing with. So in Intellect, we say $1 of client liquidity is at once $1 of bank liability. So Corporate Treasury Exchange, or CTX, offers solutions for both these needs. It helps our customers, which are treasurers, be able to maximize the return on their investments while simultaneously protecting the bank and offering incremental advantage for the shareholders.
So can you please tell us about some of your customers in Australia and around the world?
So Intellect Design today is a $250 million revenue organization. We have 270 odd customers worldwide. 8 of the top 20 banks worldwide are our customers. In Australia, 3 of the big 4 are my customers. So if I were to just mention a few names across the globe, my customers are institutions such as, say, Bank of New York Mellon in the US, Societe Generale in Europe, the Reserve Bank of India, the central bank in India, banks like ANZ and National Australian Bank in Australia.
So, whether the world is currently in a recession or not, economic storms are clearly on the horizon. And, the world has weathered such shocks before, with the most recent being the GFC. So what are some of the key differences in both the banking and external environments between now and the GFC, especially in the era of open banking that we are now in?
There are quite a few similarities and differences between today and the time of the GFC. In terms of similarities, it's clearly the tightening of liquidity that we see all around and what that does to banks' customers as they deal with that situation. Some of the differences, if I were to take a step back and look at it from an external factor perspective, maybe the unemployment rates aren't as bad as they were at the time of GFC. It's what, 3 to 4% by and large, versus say close to double digits at that time. If I were to take a look at the inflation, and if I were to use my home market, the US, for that purpose, it's what, about 6.5% or thereabouts. Whereas at the time of GFC, it was less than 5% for the most part around the time of GFC. I think consumer sentiment is also not so negative compared to way back then, right? Those are probably some external differences. On the banking side, again, the interest rates clearly are significantly higher now than they were then. For example, the Fed rate is closer to 5%. And I think during the time of the GFC, they held to closer to 2.5% for the most part. So that's a difference. But leaving numbers aside, I think banking today, as opposed to the time of GFC, is much more interconnected and much more real time. So one might immediately think, which means a particular shock wave will propagate through that rapidly and destroy the whole system. But no, I think the risk management structures of today are far more evolved. The risk models are more evolved. For example, the tools that banks use, the technologies that they deploy for predictive analytics or for the purpose of risk management in general or forecasting in particular are much more evolved. So use of AI ML is to such an extent today that in some areas, banking of today does not resemble banking of 15 years ago in any way.
Yeah, well, absolutely. I mean, the technology has moved ahead in leaps and bounds, and a lot of banks had core systems that were, 50 or more years old that over the past decade have been upgraded. And so we as the consumers are the beneficiaries, and you as the technology providers have been part of the solution to upgrade those banks to the 21st century.
Yes. So I think you would see a recurring theme of continuous investments for legacy decommissioning on one side. And that's got to be tempered with investments that have to go towards regulatory requirements. And while all of this is happening, there is a technology wave of AI, ML. You hear noises around ESG and how that's going to transform the banking world and so on and so forth.
I've got a question about that.
There's a lot on the plate of these banks.
Yeah. Now, we know that banks are using technology and AI, as you just explained, to mitigate that downside risk and to launch new products and services, and overall to get a grip on the good and bad capital that is parked with them. So you've sort of explained a little bit how your technology is helping banks in those areas, but what is a bit more detail?
Yes. So maybe start with the architecture as a whole. The architecture that we have that underpins all our products and platforms is indeed called eMAC.ai because it has got embedded AI capabilities that kind of are leveraged by all our products. I'll probably talk about a couple of interesting use cases in this space, so that kind of makes it more easy for our viewers to relate to.
Sure.
If I were to look at the insurance business that we are in, we use AI and ML in a very significant way for underwriting suite of products. If I look at cash management, we use AI and ML for segmenting transactions so that the forecasts that we come up with are that much more accurate. There is this tool that we have called contextual payment, which helps banks recommend what rail to use for a particular type of payment. Because in a real world, for example, if you're shipping perishable flowers versus shipping scrap metal, you'll clearly put them on different rails. So similarly, in the banking world, you will probably recommend appropriate rails for those kinds of payments. There is a product called contextual pricing, which benefits significantly from AI ML as well. So AI ML is going to be underpinning pretty much everything that we do, and we are going to see that play out exactly the same way on the banking side as well.
Yeah, I mean, it's taken the world by storm over the past few months with ChatGPT and Bing Search AI. So it just makes sense that this is used in businesses, enterprises, banking, finance, government. I mean, it's a wonderful technology, and we just have to harness it. And clearly you are doing that. And AI is also proving helpful in managing ESG investments and risks. And, there are pros and cons about ESG. We hear about them in the media. So how are your products helping companies assess their investments and project potential ESG risks?
Yeah, I think firstly, it's got to be understood that governments worldwide are going to use the banking system to drive through their ESG agenda. So I think banks play a very unique role in that context. I'll give an example again, because examples make it easier to understand. We are working with a very large sovereign fund in Europe. They have investments world over. And they would like to assess these investments through the lens of the ESG compliance of those. So that's where we come in. Using AI and ML, we are able to look at those instruments in the portfolio, be able to determine an ESG score, and then they can take a decision to rebalance or stay put or whatever. Now, getting hold of the ESG score of instruments is never easy. You have to deal with unstructured, semi-structured data. So you have to use things like computer vision and so on and so forth. So that's one area where we can help customers like that be able to deal with the risks associated with their instruments. If I were to kind of draw a parallel, anybody that's got investment ability, take a superannuation fund or any fund manager, when they go about their investments, there is always a requirement, or there will soon be a requirement in various jurisdictions to consider the ESG angle. So the use cases for ESG are many, and that's what we offer to the market.
So what else should we know about Intellect Design that we haven't already discussed?
All right, a few things, I guess. Way back in March 2013, so that's 10 years, we launched the world's first design center dedicated for financial technology. It was actually inaugurated by an executive from Commonwealth Bank of Australia. So we have that kind of a soft corner for this part of the world from that perspective. It's a design center, a 30,000 square foot space, which has got design tools and aids, which helps our customers come up with solutions to complex technology or banking problems. I must say it's being very well leveraged by the banking community. In the past 1 year, we've had close to 3,000 visitors from 100-odd institutions in 30 countries leveraging that facility. So that's one thing that we do. If you visit igtboxford.com, you will see our School of Transactional Banking that we run annually at Oxford in the UK. It's an intense 3-day program that focuses on transaction banking. It's a big hit with our customers because the net promoter score ratings that we receive on that is close to 96%. And this year, the school is going to run from 17th to 19th of May. That apart, I'd probably touch upon two things. One is called Ullas Trust. The other one is called Mission Samriddhi. These are programs run from the heart of our employees. Ullas Trust is a program where we offer mentorship and guidance to underprivileged children through their years at high school when they are most vulnerable, so that we can shape them in the right direction, hopefully set them up for a nice future. Mission Samriddhi is us trying to strengthen the rural administration system in India. So these are things that one may not know about Intellect Design, but we take an enormous amount of pride in these activities.
So how do you see Intellect Design evolving over the next couple of years?
To answer that, I'll have to go back to the same milestone marker of GFC, right? So I think GFC was a result of some amount of reckless investment banking world over. The decade and a half that's followed GFC has been one of grounded retail and commercial banking. If I look ahead, the next decade is going to be the decade of technology in banking. And Intellect Design is kind of aligning with this kind of a paradigm. So as opposed to being a provider of just software products, we are pivoting to being a provider of platforms that can be consumed as services, say microservices or APIs. We hear all these terms, right? Be able to be consumed as such services by our banks, where they can compose unique solutions by complementing that capability with some in-house capability that they have or capability from their fintech partners. So moving from a product company to a platform company is the journey that we are going to undertake for the immediate future.
Well, that absolutely makes sense. I mean, it's the journey that a lot of companies are on, moving to become a platform and that's a part of doing business. Now, as we get towards the end of the interview, I always like to ask a couple of questions about you. And one of those questions is to ask if you could please share a memory of your first computer.
Oh, that would be way back in 1992 when I joined my first company. I think the computer then was an XT286. I don't even remember the memory that it carried or what it allowed us to do. But yeah, that's probably it.
Yeah, I remember those computers. They were very primitive compared to today, but they were absolutely, the latest tech at the time. And
yes.
As I said, we sure have come a long way. Now, what actually got you interested in the financial world, and why did joining Intellect Design excite you?
When I graduated from my university, my first job, which is still my current job, incidentally, was with a technology division of Citibank, which later got acquired into my current company. So that's how I'm here.
Right.
The city of 1990s was an excellent learning opportunity for a fresh kid out of college that was keen to kind of make his mark. The way they manage their global systems, running in 80, 90, 100 countries, dealing with local nuances yet being centrally managed, the scale of operations and the complexity of all of that, the money that was moving through these systems on a day-to-day basis fascinated me enormously. Since then, I think I've had the privilege of working with 100-odd institutions, and every one of them has been a learning opportunity for me. So I feel quite privileged to have been given this sort of an opportunity by the banking community. So money, numbers, all of these, I think, hold a lot of fascination for me. And every day is a learning opportunity. So I enjoy every moment of it.
So my second last question is always to ask if you could please share some of the best advice you received in life to help you get where you are today.
Yeah, when I graduated from university, the first project that I was put on to dealt with legacy technology. So like any kid out of college is quite concerned as to what that might do to my career. So I reached out to my boss and he asked me a few questions that made me sit up and think about the whole situation. He asked me if I was clear about the business outcome my project was trying to achieve. He asked me if I had clarity as to the business priorities it was addressing or the business problems it was solving. And he said, look, if you're clear about all of that, think of technology as just a means to an end, a tool to drive business outcome. I think those words ring true even today. So today I'm in an executive position in my organization and I take a lot of complex decisions. So there is one way I validate whether I'm taking the right decision is by asking myself if I'm clear about the business outcome that I'm trying to drive and whether I'm not getting overly consumed in the technology hype. That's kept me quite honest and grounded from that perspective.
Yeah, I've heard other people describe that as start with the end in mind, because you have a goal and then you're working towards it. So great advice.
Exactly.
So what is your final message to iTWire viewers and readers and to your current and future customers and partners?
The message to iTWire readers and viewers and to my customers and partners would be that first, I think at some level, all of us are somewhat blessed for having collectively weathered storm after storm in the recent few years and having emerged resilient from that experience. But through that experience, what I have learned personally is what has got me here might not necessarily be what takes me forward from here on, which means one needs to have the ability to learn, but also unlearn and relearn to stay relevant in changing times. And finally, I think my message would be find out what your purpose is and stay true to it. There will be chaos all around. Chaos will be the new normal. But I think successful are those that have understood their purpose and stayed true to that true north that they are seeking. So I guess I'll take the occasion to wish iTWire news readers and viewers and my customers and partners the very best. Stay healthy, stay safe, stay curious.
Excellent advice. And I really thank you for your time, Uppili Srinivasan, the COO of Global Technology Banking at Intellect Design Arena. Thanks again for taking the time. I wish you the best of success, and I do hope we can talk again in the future.
Thank you for having me, Alex.
Thank you. Bye-bye.
Bye.